The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I just thought I'd show a particular chart pattern that's formed in the 2-minute E-mini chart. This is the March. It would be the same thing for the June. I'll change the June a little later in the week. At 27.94.50 at plus 10.50. Look what happened. There's a little handle with a cup. Potential for another little handle right here. And this particular pattern, in my experience, I did a lot of work on this years ago. And if memory serves me well, the handle and cup, which is different to the cup and handle, will be very negative if there is a pullback from the top to the bottom of more than 50%. It should go not only to the bottom but underneath, and you've got your 200-period moving average of 27.90. We'll see, but right now it's forming a potential second handle on the right side. That could actually turn into an inverted head and shoulders. Weren't we just talking about that with the parallel horizontal move from the left side, around about the 27.97s, all the way through. Isn't that interesting? We'll watch it. Just thought I'd mention it. It came up with a beautiful left side, right side price time match. So I just wanted to show you crude oil here is running quite nicely. Look at the weekly. The MACD is good, not great, it's good. The stochastic is very nice at 86% in the weekly chart of the crude oil continuous contract. Made a low at 42.60, a long-legged doji candle right there. It was December, the third week of December. Yep, the 28th of December. And what we've done is we've just steadily walked the pink line, which is the 9-period exponential moving average. Then broke above the 14-period moving average briefly, tested it again, testing it again this week, little doji candle last week. This is nice action, and I personally would prefer to see crude oil holding very steady here, preferably just trading between, I said the other day, between 58.5 maybe and 54.5, kind of a range. So far, this is good. The other thing I wanted to talk about here is the TLT, which is the bonds. 121.50 on the Lehman 20-year Treasury Bond Fund. Made a peak A from the 118.64 low of 5-6 sessions ago. Stopped at the 121.53, was it? 169 level. Pulls back just a day yesterday. Now it's got a little inside day here in terms of that candle. I'm watching this closely because if the yields continue to pull back as bonds go higher. Now let me go to the TNX. Let's go to the 10-year because that's the most practical one that we use. The TNX made a 2760 high, peak B. It looks like a peak B minus failure, minus B minus failure. 2759 was the high. Traded down to the 2607 level 3 days ago. Bounces up to the 2656 level today, back to red. I'm watching this. Why? Because the lowercase h in the weekly chart went to a lowercase m, and that can continue for a while, almost like a rectangle pattern fitting into an H pattern. So we've got to see this as potential for a break to test the 2554 level. We're at 2630 right now, 2.630. The MACD is trying to turn up. The histogram is improving a little bit. The stochastic still stuck at 24%, showing no strength. I suspect we're just stuck in a range for now. We're going to stay that way for a little while longer. Okay. Now, there are 3 aspects that I wanted to talk about today. One is that the VIX index over the last week has had a bit of a range. It's gone from the 13s to the 18s, and now back to the 13s. And what it did is almost like the TNX, the 10-year. It made the H pattern look like it was making another M pattern and then broke to the upside. And very unusual, break to the upside and then come back into the trading band, the lower part. That says that the VIX index for now is not showing buying pressure. It was 3 days ago, couldn't hold it. Not showing buying pressure. That's number one. So the VIX at 13.81 is in the buy zone. Hey, buy zone, it's the S&P that has it because Boeing, let me just quickly tell you what Boeing's doing because that is a huge factor. It's a big percentage. Boeing's down 25. Oh my, at 374. This morning it was about -9, had a huge comeback yesterday. So that's going to be very interesting. Have a look at this. So you've got Boeing in a leg D in the monthly. Did the Chapman? Oh, I should have done this. I talked about it, but I never wrote it in. Leg, body. What's this pattern? Some of you know it very well. Neck. And we don't know yet, but there's a chance that this is the beak. My noontime sneeze. I wonder what that's all about. Must be the sun. Sun shining in my eyes in my room. Thank you. So that is the Chapman wave stalk leg formation. Long leg, oval body, long oval body. Not a rectangle. There's no way it's a rectangle because it's expanding to the high and the low. Then it narrows and then it breaks out. Breaks out to a leg D to a 446.01. Now it's trading at 374. Had a low yesterday of 365-ish. This is going to be very important because Boeing is a big. Look. Let's just see what it's done to the XAL. I haven't even looked at it for 2 days now. XAL, it's only down 29 cents. That is really. What is that saying? XAL goes from a high peak D at 106 point. Right there, 106.78 on the 26th of Feb. That's a little bit of a dive. Dives down to the 96.31 area. And with all the bad news from Sunday, it's actually up from the low that was made on the 8th Friday, and 96.31 was the low. And today's high is 98.44. Isn't that interesting? Yeah. I'm busy saying, oh, I wonder what happened to the airlines. Maybe specific airlines. Love is all that you, oh, look at that. Down -122 at 50.39. Had a big green candle yesterday. Had a high just recently up in the 59s. That was back on the 12th of Feb. Comes down to yesterday's low of 49.82. And an inside bar. Let's see, American Airlines, AAL. American Airlines is down 64. Oh, this has been impacted for some reason. And what UAL, is it UAL? Yep, UAL. I don't want to go through them all. Yep, oh, ugly. UAL must have quite a few of those planes. Yeah, 80.41 down $1.96. So they're all being impacted individually. What's happened to Federal Express? Up. And I think that's a big part of the IYT that is moving here. Yep, the IYT came off the low that was made at about 181, goes from 190 to 27. Chapman wave 2-bar reversal on the weekly chart, and it pulls back to 181. Now it's at 186. Okay, we'll be watching this. Basil Chapman Technicians Hour. So I want to look at the volatility index. I want to look at the impact of Boeing. And the third thing, we looked at rates. I'll talk about it a little bit more when we look at the HGX, and that is the Philadelphia Housing Sector Index.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tiger Technicians Hour. Actually, we've got Mark waiting for a little while. Turns out Mark, he couldn't hold it. I'm sorry, Mark. I actually just didn't see. Usually I look down and I just didn't see that you were right there on my call list. So Mark wanted about the TGB. Maybe he's able to listen. He's just not able to hold on the phone. That happens very often. Mark, you wanted to look at TGB, which is the Seiko Mines. It's a copper company. And, copper was pulling back quite sharply. And then it had a very nice candle earlier today. It's actually still up pretty nicely. It's up 0.03 at 2.9355. So with that in mind, the decline took time, not very much price in copper. That to me is a good sign. It's kind of what I was expecting when we went along our TGB. We don't have it anymore. TGB's Seiko hit 0.72, a peak D, back around about the 25th of February, and then it pulled back down to 0.56. The reason why I didn't want to hold it, and my initial thinking was, hey, just hold the copper, because if this market is going to actually be a much bigger move to the upside in 2018, regardless of pullbacks, and I do call them pullbacks, then there's a really good chance that copper is going to show some strength rather than weakness, because I don't see how you can get American markets moving high without dragging up the other markets. So in answer to your question, I don't know what your question is. I do know what the symbol is, TGB, and I apologize because you were right there off the bat. You wanted to speak to me. I just didn't see it, didn't expect it, actually, in my first little monologue segment. So I'm going to say to you, TGB, if you have a much longer-term perspective, and to tell you the truth, from our entry price and all, it's just kind of where it was. Even though it ran up really nicely, gave a really good gain. That's the reason why at one point I said swing traders might want to take a little bit off. But I didn't want to hold it if it took out 0.54. It's at 0.59. And the reason is that would have created a pattern that says that the Eiffel Tower straight up and straight down is not holding support. And the next thing you know, it's testing the 0.53 level, 0.52, and then it starts to make a big arch formation that says ups, and that makes it much more difficult if copper is pulling back to rally enough to get to the 0.64, 0.66, where you can have some comfort. So I just decided we have particular positions right now. I'm very satisfied with the positions. One got to one short. We took about 10% profit in part of it, and we got stopped out today for a little bit of a profit, not as big as it was the other day. But I don't mind. You can see by Boeing's action yesterday that this is a market that is finding buyers, it's finding sellers, and is basically going to be in a trading band very selectively. And that's the issue right here. So I'm a little surprised actually to see copper moving as nicely as it did. I like that action. And I'm going to say to you, Mark, or anyone else, if you're able to hold this and just put it as like part of your portfolio, and you say, you know what, 1%, 2%, I don't know, whatever it is, just a small percent, because it's a very low price stock at TGB at 0.59. This is going to be there because regardless of if it pulls back at some point, this is if I'm correct, Basil Chapman's correct. I mean, how do I know if my thinking here is that we're in a mega bull market. We're about to go into the next coda phase. We just need to consolidate the huge gains from December, and it's going to be a rotational correction. That's what it didn't look like at first, but now it looks like it's a rotational correction. You're in the right sector to go down, it'll go down. If you're in the wrong sector, it won't go down. And you just have to deal with that. And what we're looking at now on buys that we want to get, what price do we want to be buying? Well, I'm saying to you, 0.59 to 0.54, that's probably the area. I'll be unhappy if it starts to trade at 0.48, because it seems to me if it goes to 0.48, it's going to take a longer while to get back. To say it's not going to get back to 0.59 is silly. This thing trades in this trading band. It will get back to that level unless it goes broke. But I don't know how long it'll be. And I just didn't want to be stuck with a percentage decliner. Not a point. I mean, you're talking pennies here. 1 penny is a big percentage. Right now, it's down 0.01. And it's down 0.99%. It's at 0.58. So I just didn't need that right now. I'm trying to build up a cash position because there are some fantastic stocks that we want to buy. So, Mark, if you're looking at this as part of a portfolio, buy a little bit. You had 0.58, anywhere in this range, but you're going to have to be prepared to keep it. And then you want to start adding to it on the next big move that goes to the 0.66 level. Maybe add to it, and that one has a stop, say maybe 0.57. Something, whatever it is, but that's the one that should start the U-turn that goes to leg C in the weekly. So I chickened out. It was not, the long-term plan was different to what I actually implemented. I had a reason for that, but the more I think about that reason, the more I'm going to have to rethink, because you know what? It looks very much like it's got tremendous support in the 0.54, even 0.52 area. And at some point, it looks like it's going to try its best to get to 0.66. So once it starts to move up and breaks above 0.72 in the next couple of months, that's just going to be big. That's going to be really big, because the next level is 0.75, and then it's kind of open after that. All right. Hope I dealt with that. And sorry I didn't get to your call. But call me tomorrow if you want to go through this again, if you have a chance. So the next thing is, I had a question here about a stock that I haven't looked at, ZUO. ZUO, the question was, ZUO, I don't know where the question is. ZUO, oh, for long. So ZUO is Zuora Inc. I don't know what they do, and that Inc. is INC. So, hey, maybe they're in the printing business. No, seriously, I don't know what they do. And I don't have time right now to do it, maybe during the break. But let's just do this quickly. Chapman wave A, peak B, peak C. I need to double check that because I have a line overlapping. 2160, 2155, just when I did that. A D. Okay, that goes to a D, and then it goes to an E. And that E pulls back sharply, goes to an A, it goes to a B, and it goes to a C, I believe. 2447, 2448. So that's your C. And now it's pulled back. Yes, I think this is kind of what I said to you before. It needs to move right away. I don't really want to see this go. I answered, this is from the Den, and I answered in the Den. It's trading at 23.49. ZUO trading down 6 cents. This is the move that you want to see it quickly go above the high made yesterday of 24.17, because you wanted to go to a D. I didn't know this was a D at the time. I just did this on the chart formations, which is what you can do. And that says to me, if it pulls back and it goes under 23.10, especially 22.90, it's going to take more time than you want, and then you'll have plenty of opportunity to get it. But you get it at a cloud-based software subscription business. Oh, man, that cloud-based software, huh? You know, I'm going to say exactly with what I said. If you're going to start a little nibble right here at 23.51, and I would have a tight stop, because if it does pull back and it goes under the 14-period moving average, I think it's going to stay there for a couple of days, and you're going to have a better chance to get it. You want it to move right now so it can go to a new high leg D above 24.65. Basil Chapman, Tiger Conditions Hour. Dow's down 70. I'll be right back after these.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just check that out because I'm just looking at, yes, very interesting. I've got a chart here. This is the 30-minute gush. Remember, we were looking at it yesterday, and we were looking at a low that was made, and then there was an A minus, and then an A, then a B and a C. And then finally it broke that original A minus, but that was already C, and I said we've got a D. And then we were looking at it, walking the different moving averages. It's gone to an E, so it's up at 973.58. So very nice. I just wanted to check that out. We've gone above the 9-period exponential moving average. This is very nice actually. Look at the MACD is good, stochastic good. This is a 30-minute chart. Remember, it's flattening out. It's like a stair-step move. Keeps going up, goes sideways, up, sideways, rather than giving it back, giving back most and then going to a new high. Yep, I just wanted to go through that. Now here we go. I want you to look at the, where was it? I had a question about it. Yes, the FXI. So the FXI is the China. This is the big large caps iShares China large cap ETF. Goes to a peak C, maybe a C1, C2, doesn't matter. Pulls back from the 45s down to the 42s, trading now at 44.07. So this is saying that China, when you think about it, look, the weekly chart has made a nice cup formation, made an H pattern that turned into a cup formation. Never took out the left side low. That was the low of 37.85 back in the week of November the 2nd of 2018. So this is still a trough B in the weekly and the monthly. Made the arch formation, then broke out to the upside. That's kind of what I thought would happen to the TNX because it did that, but didn't. It gave it all back. Now, what's really interesting, not all, but most of it, what's interesting about this is that the MACD's weekly is strong, stochastic still at 83%, a horrible week. Look at that candle from last week, but look at the inside candle so far, Tuesday, 1.5 days we've got of this week, and it's already off the low of the 42s. It's into the 44.08 area, and it's improving in the weekly chart enough to say, well, the daily chart doesn't look great, but price is moving up as the technicals are trying to turn. So let's say what's the end result? The end result is that from this little doji candle of 3 days ago, we've had a very nice move, and it tells you that there could be a failure if there's a break underneath 43.20. It's at 44.08 right now. A close under 43.20 because it could start that H pattern. It's going to retest the 42.50 200-period moving average. But if by Wednesday afternoon, Thursday morning, the FXI trading at 44.06 right now, 47 cents, if it is in the 45.51 area or higher, says, you know what? It's going for a leg D in the weekly. Isn't that interesting after all that we hear about China, the weakness in China, etc.? So we're going to have to watch that real closely. Now, here's the other thing. In the EUR USD, euro dollar currency pair, yes, there's been a nice bounce, but that horrible candle of last week, that was on the 7th of March, we've been filling that in step by step every day, has to break above and close above, let alone break above. 1.132 needs to get nicely above that. And that'll say you've got the same pattern where an arch formation tests the lower right side. It either goes right just above or just below, but it closes nicely above. That's starting a move that says, hey, we could now get at least a short-term buy signal to buy mode. We aren't even at the buy signal stage yet, but this is the pattern we're looking at. The lowercase h becomes a much bigger cup formation. The monthly chart, that's what it's pointing to. Even though this is a terrible chart for the euro, it's a start. It's the first time that I can say to you that that right side is starting to improve much better than you got on the left side of the arch formation in the daily, and certainly in the much longer period weekly chart. The technicals are improving much more. So we're going to be watching that, and we watch USD JPY. Why? USD JPY. Why? Because it made a peak D. It's holding the 200-period moving average. It's holding quite nicely. The weekly is still good. Weekly still says it looks like it needs to go to 100, 112. What would that be? 112.13? 112. 13.8. Let's call it 14. 112.14 to start another leg up in the daily, but to get to leg D in the weekly. I think that's still in the cards. Okay. Did that even copper? Just want to quickly say that copper at this particular point, if it gives back too much of the gains, that's not good. But if it actually closes above 2.955 by Thursday, that's really good action. Pulls back under today's low of 2.9050. 9050, wasn't that a show once? Yeah, anyway, that would be very negative. All right, make it as simple as, oh, I said I'd go to the HEX. Look at the HEX. Nice cup formation, kind of stalling here. It looks like it wants to go to a leg D in the weekly chart. This is the Philadelphia Housing Sector Index, trading at 286.99, down $1.08. It has to go above this high, the peak D high that was made on the 25th of February, 292.21. You got a 292.22. And you've started not just the cup formation, but you've actually started a leg D in the weekly chart and extended leg A in the monthly. This is nice action. So the lower yields should be helping the home builders much more. It is helping them. It has gone big percentage move from 229 to the high just the other day of 291. I would say that's 70. That's a big gain. And let's go to ITB. ITB is the building. What is it called? The iShares U.S. Home something. Yeah, U.S. Home Construction. That's the same chart. Look, peak F, and it's making a cup formation, stalling here. It needs a leg D above 36.13. Same thing. Oh, this is interesting. And what was the other one in the den? Let's see. PHM, that's Pulte Homes. PHM trading at 27.84. Peak A, peak B, peak C, and it's stalled weekly. Peak A, B in the monthly, and you've got your daily. Oh, this is what I was talking about just a moment ago. This is the chop. This is not a good stair step. This is a, yeah, I suppose you can call it a stair step, but wow, this is more than stair stepping. This is dancing the jig. This is more like an Irish dance here. Look, a lot of action, but standing still. Got your hands down on your sides, doing a great kaploppity kaplop. Yeah, it's just stuck in a range. It's not breaking out, Pulte Homes. But it's done a lot better since it hit that low in the 21-ish area. It hit 28, and now it's at 27.84. So it's trying to find a cup formation, more like a staple, but let's call it a cup formation now. That all changes if it goes under 27.50. All right, Basil Chapman, Tiger Technicians Hour. Let's look at now, as we're about to go to a break. Yeah, sideways action. That's what I was saying. These handle and cup formations, not cup and handle, but handle and cup, they very invariably start to break below that midpoint, and that's really important. That's the midpoint right there. And we're at 27.94. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I just got an email. Hi, Basil. Is it time to short the XLK? Well, XLK is the tech sector of the S&P Select Tech Sector Spider Fund, trading at 71.88, up 0.57. The down move to 3 days ago to the low from the peak D that was made, that was at 71.82. Saw a pullback to 68.84. It's just 3 points, 3%, nothing much. And then there was a 2-day rebound with today's high taking out the previous high. But for argument's sake, because the technicals are still not so great, I'm just going to call this E. That doesn't say, got to start shorting. But it does say now start drawing trend lines that are important. And you can see you've got a wedge formation right here. And it's going to be an arch formation. And it could be a V-shaped formation. It's a whole bunch. But it shows you the resistance levels. So my answer is that I don't think at this particular point I've got enough evidence to say XLK is a short. I got a pullback, but a short, in other words, would it go back to 68 very quickly, 3 points from where it was just 3 days ago? Oh, man. This is just an A in the daily, in the 120-minute chart. I like this. To tell you, look, the MACD, this is great action. MACD stochastic. Can I answer this way? Just real, you're asking me my opinion, therefore I'm going to give you my opinion. I would not short, but I'd be waiting to buy. I love the weekly chart. I love the monthly chart. So I'm just going to say, if you think 3 points is important and you can short it, then between now and tomorrow this time, I'll give you some information to say what you should do. But to tell you the truth, I'd actually have to wait for a pullback, and I'd have to give away some points at 71.98. The low was 71.29 today. If it goes under 71.20 and looks like it's going to close under that way, I'd say, okay, if you're watching it real closely, you could short it. I'd prefer just to use a put option, and that's it, case closed. You're either right or you're wrong. But if you ask me my opinion on what I would do, I'm saying to you, I'm watching for the next pullback, because if it takes time to get back to 69, that's going to be really positive, because the MACD and stochastic and the weekly chart are not going to dissipate very easily. They have to pull back immediately and then start to close under 68.50. 200-period moving average of 68, close under 68. That'll be very negative. So no, as a trade, you'd have to finesse it really carefully. I would just say to you, keep it on your list as a potential buy rather than a sell. If you're a real short-term trader, I just gave you what I'd look at. If it closes underneath 71.20, even then, I mean, Well, you could put in a stop over today's high. It's real simple. And the whole market has to pull back. You're going to get nothing unless the whole market pulls back. You see where our E-mini is? Stuck in that range. Isn't that incredible? Now it's starting to go to the lower part of that range. 3 cup formations, and now it's starting to fade. Wow. These things, these sideways trading ranges can last a long time. So look at the XLK with the Chapman wave automated resistance points. Look at that 72.35, 71.85 was the resistance right there to pull back down to where 68.34 was the automated support. That's where it held, and it popped up to 72. Today's highs, what did I say it was? 71.90 something? Let me just check. 71.98, and it's trading right now at 71.89. 72.35 is the resistance, and you've got a lot. Look at the 10-minute chart, shows you 72.07, 71.98, and the 120 has 72.13, and then very strong support in the 69s to the 68s. So I don't see it right now. Next question was, that was XLK, right? Yes. So that's that one. Then the question in the den was WMB. Let me just do it right here. I've got the chart up. WMB is, I know this so well, Williams companies. 28 is the automated resistance. The high today is 27.70, 70 something. And automatic 27.59, the 10-minute 27.67. You get into some kind of resistance. Now let's look at it in the chart with a white background. WM is waste management. WB. I just did that, didn't I? Could I look at WMB? It's a mix of the two. WM and a B. WMB, there it is. So it's gone to a leg C in the weekly chart. The MACD is good. Stochastic's just like a rock, steady at 98%. You know, I love this particular pattern. The daily, what was the question? Let's look at that. It says, Basil, thoughts on WMB, Williams Company, thanks. Yes, I'm looking at this. You see these rectangle formations, they last a lot longer than your patience. A rectangle formation that starts to unfold at a top of a big range. In other words, you've had this huge move to the upside. You're above the 200-period moving average. Says that there's a real good chance you're going to come down and test the key support level, probably take it out, and then you got to do an analysis from where you are. So I'm suggesting to you, yes, we've just gone to a new high. I'm going to call this, just for argument's sake, F/C, because it's just a sideways range. It looks fabulous, but I do think it could pull back from the 27.55 level. To tell you the truth, over 1.5 points, when the monthly looks like it's eventually going to get to the 32, 34 area, I wouldn't fuss over one point. And I know that you're a long-term buy and holder. I'm going to make the suggestion you start. You don't have it. It's just my thoughts. My thoughts are that you could start a position here, knowing this is not ideal at all, but it could break a little bit to the upside at this particular point. So at 27.54, start your position. What do you really want? You actually want it down here in the below 26.80, somewhere around 25.80 to 26.60 to 26.40. That's really where you want to start your position, knowing there could still be a bit of a dip. But that weekly chart is saying, wow, it's held steady. It could have a sudden slide into the 25s at some point, but it looks like it's building up support and some kind of momentum to really power into the 30 area, but you might have to wait. It looks like time. If you got time, I'd say nibble and then just wait. Have patience. All right, good. Let's see. You have a position. Oh, you already have a small position. Then if you have a small position, then I don't feel uncomfortable saying to you right here at 27.55, why not add another little position? And then the third position is going to be the one, if it takes out both of your entry points, actually starts to get, I don't know where you got back in, but 26.40 is really where I would like to build a position. That's what I'm looking at. All right. Oh, and it has a 5% yield. I love that. Very good. Basil Chapman, Tiger Edition's out. Let's see if the E-mini took out its low that I think it's going to do. It's right on the cusp. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So remember, we were talking about the ladle, the handle and cup inverted mirror image of the cup and handle pattern. It's the one I said invariably fails, and then it starts to take out the lower, especially if it goes halfway below the top and the bottom. That's exactly what we're looking at. The E-mini just failed. And let me apologize right away to Rich. Rich wanted to know about JBL Rich from Oregon. I just didn't see it. I looked down. Somehow I didn't see it. My mistake. So please call again tomorrow. But you want to look at JBL, which is Jabil. I think it's in the semiconductor area. It's been around a long time. I just don't like it right now. I think the semis are still struggling quite a bit. Here it is at 27.78. I don't know whether you're long or short. I'm going to tell you my impression. My impression is it's going to make an arch formation right here and do a retest of the low of the 26.60 area. That's the 200-period moving average. And I wouldn't be surprised if it breaks it. I suspect in about 3 weeks' time, based on the weekly chart, it starts to turn around and it starts to move a little higher. So sorry, I'll do more in the evening, and I'll come back with it tomorrow. But I just think it looks quite good in the weekly chart. Just the daily says it's going to have to give back some of the gains that it just had, and it had a spectacular run from the 21s to the 29s, and now it's pulling back. The next question wasn't a question; it was just a statement. Look at what were we looking at yesterday? That with a P, the what's pump? I don't know. We looked at that with the P. We looked at, what did we look at? I can't find it now. It was the electric battery company. Anyway, doesn't matter. And S Stitch Fix. What a move yesterday. Pop comes out with earnings. It's at 34.78, up 7.82. We liked this way back. And then we said, nah, it's not doing anything. Then it went even lower. But now I think it's in play. So this big gap, let's see if it can fill between the lower just recently was 24. Let's say it's at 34. Let's see what happens if it gets to the 31 to the 29 area. Maybe this is one to put on your list. Yep, they stitched their own clothes. Okay, folks, stay tuned for Steve. Stay tuned for Dave and Tom O'Brien. I'll be back tomorrow. Have a great day, and I have to apologize to Rich for not getting to him in time. Be back tomorrow.